Let's bring in Eunice Yoon with more from Beijing. And Eunice, we saw more rate cuts today, but also more pessimism about the outlook.
Yeah, absolutely. Goldman downgraded its outlook for China for the year from 6% to 5.4%. The bank's been arguing that Beijing's moderate, what they called moderate policy, just isn't enough to offset what the bank sees as a real problem, and that is weak sentiment. HSBC also cut its forecast today. The bank cited the low business as well as consumer confidence, again, as a major problem. And this comes after several financial institutions had cut their outlooks for China as well because of the May data, which showed a lot of gloominess all the way around. Now, the policy cuts, Sarah, that Sarah had mentioned, didn't really improve sentiment much either. This was a benchmark lending rate that the central bank had trimmed by 10 basis points. The problem, even though it was widely expected, is that it just wasn't as aggressive as many people had hoped, especially when it came to the benchmark for mortgages. So this is a 5-year LPR. So that did not help sentiment, and it all comes as people are debating what the government is going to do next. On Friday, there was a big leadership meeting. Officials had suggested that they are very concerned about the economy, but there wasn't any detail of any major stimulus plan, and that's really what people wanted to see here.
Why didn't they go bigger? Is it a sign that they're not in panic mode? I remember they went like a full percent during COVID in terms of the rate cut, so maybe it's a good thing, or maybe what, Eunice, they don't feel like they are able to fight it?
Well, I think that there are a lot of different reasons. That there's a huge debt issue here. So that there's a big debt problem, and a lot of the authorities here remember what that was like working through it after the past crises. So that's one issue. Also, a lot of the authorities that end up paying for the infrastructure or doing all of these large-scale projects are the local authorities. And currently, a lot of those local authorities are having major financing issues because of zero COVID. So there are a multitude of reasons why the government authorities here really don't want to go bigger. But what people are wondering is how long they'll be able to kind of drag their feet on that just because the sentiment here is really, really gloomy.
Speaking of which, it's maybe no mystery, Eunice, that they've hosted some big corporate leaders in recent weeks, Jamie Dimon, Bill Gates. We talked with Kramer this morning about some of the comments about the Blinken visit here being reflected through the words of Xi, that they're making progress, that there might be a Biden-Xi summit maybe in San Francisco later this year. Is that how the readouts are coming there?
Yeah, and what I think is interesting is that Goldman had pointed out that now that it looks as though the bounce from the reopening is starting to fade, that some of these, what they described as medium-term challenges, are going to come to the fore much more. And they cited geopolitical tensions. So you could see a reason why the Chinese would want to work out this issue. And now it looks like after the Blinken visit that more and more U.S. senior officials are going to come, and the ones that maybe the Chinese would think are more important, or at least they've said before that they welcome them, are on the economic side. So they've said before that they welcome Treasury Secretary Yellen, that they would be open to the Commerce Secretary Gina Raimondo for coming here, because they do want to work out a lot of these issues and feel as though those avenues, when it comes to business, are much easier for them to talk about and get something out of, as opposed to Blinken's visit or, of course, the military issues. And Blinken actually had flagged that, even though he repeatedly on his trip mentioned that military-to-military talks are extremely important, especially direct talks, he said that the Chinese did not agree to move forward on that.